Welcome back to JRUS TV. If you're new to my channel, hit that like, comment, subscribe button. We cover all things business, investing, and self-improvement content. That's something you're interested in. Consider subscribing and leaving a like. If you're returning to my channel, appreciate you tuning back in. You already know you got to get straight into the business. We're not bullish enough. The market is only rewarding AI companies right now. We getting into earnings seasons, and I've been getting some sneak peeks of some earnings I've been following just to see how that relates to some of the companies I'm invested in. And we're not bullish enough. I'm just gonna start off by playing this video by Google's
been talking about how Google is in such a unique position. They have
one
the
of Google's
cash
CEOs.
cows, they have the chips, they have the models. Been talking about how Google is in such a unique position. They have the cash cows, they have the chips, they have the models. Does your Gemini team ever come to you and say, like, we don't have enough? Or I know I'm really sticking on this point. It's just so wild for me to hear where these other companies are just not able to keep up.
There's always demand for these things, and I think for the next 10 years there will always be more demand than supply, and that's a good place to be in if you have your own chip. If you don't, you're reselling other people's stuff, and in a capacity constrained environment, your unit economics get more expensive. And in our case, because we control the chip, the unit economics remain attractive. So that is going to be an advantage for us because we own the silicon.
Been talking about how Google is in such a unique position.
So this is one of the Google CEO essentially saying that, shout out to Wealthmatica for this post, Google Cloud CEO on demand. I think for the next 10 years, there will always be more demand than supply. Google Cloud CEO. This is huge, guys. This is huge. This is huge because this is the industry you want to be in right now. And right now, the market is rewarding AI companies that's really executing. Between that quote right there, I mean, I already knew we don't have enough. We're supply constraint overall, but it's bullish for the companies that we in a portfolio. AMD, Nvidia, and Nebius, the three plays I'm big on right now. This is bullish for them. I'm talking for this AI specific market. I know some other companies been going up. Intel earnings went crazy. I can go ahead and share that. Intel earnings recently went crazy as well. They went up. Shoot, I don't even know how much they went up. They went up crazy this past week. Intel went up 29% after earnings this week. Jumped from 66 to 80. One of the easiest trades. Trump, the government, Jensen put billions in this joke. Like, this should have been the obvious trade. Dang, 120. This should have been the obvious trade. I'm not gonna lie. This should have been an obvious trade. It's up 100% on the past month. 100% in the past month, bro. That's crazy. If you don't follow me on X, you know, I put this, make sure y'all follow me on X. I put this quote out that the quote from the Intel CEO. The next wave of AI will bring intelligence closer to the end user, moving from foundational models to inference to agentic. This shift is significantly increasing the need for Intel CPUs and wafers and advanced packaging offers. I say overall bullish AMD because who has the biggest market share right now when it comes to CPUs? And that's currently AMD right now. Now AMD, after this Intel's earning, AMD went on a big tear. I do have a public stock portfolio, so if you're interested, leave it a follow. Go back on my channel. I've been documenting this for the past year and a half now. But you can see the AMD position that we were buying in the 120s, 100 to 120 range. We up 163% right now on AMD. You know, crazy. 36% of portfolio right now. Past week, AMD's up 17%. On the month, it's up 60%. 60% on the month. This is clear rotation. This is the market clearly telling you that AI companies, AI related plays are where it's at right now. And if you look at Amcor is they're semiconductor packaging and test services. On the data down, we're gonna get to that. But on the month, they're up 66%. 66% on the month. 73% year to date. Bloom Energy just reported today. And I put this in my stub tech too, and it was like 160. I could have jumped in it, bro. I could have jumped in the hundreds. I'm not gonna lie. Sheesh. Up 106% on the month, 15% on the week. They manufacture and install solid oxide fuel cells, power generation. So basically this AI demand, data centers, they need energy. We're energy constrained. But it just goes to show you all that where we are constrained and the market is currently rewarding AI infrastructure, AI related plays, and this is where you need to be. So this is why I'm still going to be adding to my Nebius position. We did go up to like 160. Nebius went on a tear too. I didn't even show you on Nebius. I guess I should give you an update on that too. Nebius went crazy too over these past month. Like I told you, I've been adding Nebius really heavily, but it peaked at like 160. But on the month, it's up 42%. It fell at 90s. My average around the 90s. That's when I was buying. It ran up so fast to the 160s. Now it's starting to, turn back down a little bit. People probably taking profits. So I'm adding here. Again. It's down 14% a week. I'm adding here on Nebius, and I'm going to continue to increase my position. I would like to get initial investment bigger than AMD in Nebius. I think that's my goal. So if I can get it under that 150 range, 120 to 150 range, preferably lower, closer to 120, I'm buying heavy. Now, another reason why I'm saying that why we're so bullish, why we're not bullish enough, we're so compute constrained is not only because one of Google CEOs saying demand is going to outpace supply for the next decade, but also OpenAI. They posted this, I think, the other month or a couple weeks ago, April 22nd, that in January we committed to generating 10 gigawatts of compute and have already identified over 8 gigawatts of that. Now we're planning for 30 gigawatts of compute by 2030, a milestone that scales with the rapidly accelerating demand for intelligent systems. So we're not bullish enough. We're raising guidance on compute. We're compute constrained. Now, today the market did sell off a little bit. Let me go to Amit. I think Amit covered it. But essentially, OpenAI came out with some numbers as far as their subscriptions and things like that. And they weren't looking too good. But at the same time, right here, stocks are down big this morning on that WSJ report that OpenAI missed internal revenue targets at the end of 2025. But it says OpenAI did not meet its revenue backlog is because they do not have proper compute needs. Jassy, Dario, and Altman have all said that if they have more compute, they can grow faster. The bottleneck of energy, power, land seems to be much bigger than the story than missing revenue. Because of the compute constraints are reason for the miss. That's an issue with supply, not demand. So I like what Chris Camilio said. I like his YouTube page. I think Dumb Money. Same AI fear every 60 days. This is the right before tech earnings. Recycling the stale old OpenAI missed narrative. Market finally tuning it out. But we're not bullish enough. That OpenAI wasn't really a bearish thing. It was just saying we need more compute. If they have more compute, they can put more numbers up, essentially. So, Jonathan, how does this work? This is why I'm bullish on AMD, NVIDIA, and Nebius right now. And I'm thinking now software, Zeta has good potential this earnings this week, but they have to beat and raise guidance, what they've been doing for the past 18 quarters. So it's cool, but they need to exceed. And the CEO, he needs to put a lot of emphasis on them being the disruptor with AI, not AI disrupting their business. So if it's now put the earnings out and they did okay, but they didn't smash them and they got set down like 14%. The missing part to this puzzle is Zeta. I need Zeta to go. I need Zeta to come in and smash earnings, which I think it will do. So if it does, I think the street will give it a bid and we can run up and hit back to 25, 30, 35 plus. My target all-time highs this year. All-time highs about $38. So that's my all-time high, my base case. Bullish, closer to 50 maybe, but yeah, we're not bullish enough. We're compute constrained. This is not financial advice, but I'm bullish AMD, bullish Nebius, bullish NVIDIA. Those are my main AI plays to take advantage of this next decade. So hope you enjoyed this video, this little snippet. Bit bullish enough, work an extra job, save some money, start allocating to these AI plays because we're in a build out that's going to create a lot of millionaires and wealth for your family. JRush TV, we out.